NSE Securities. Let's take a look at some of the latest development in Sri Lankan economy and financial markets. Following its review visit in Sri Lanka, the IMF team is skeptical that despite initial indication of economic stability, the country's complete economic recovery remains uncertain. A significant observation was the absence of a definite schedule of disbursing the second tranche of funds, primarily due to the Sri Lanka's failure to meet IMF targets in two critical areas, namely tax collection and debt management. However, the CBSL governor says that he is confident that Sri Lanka will be able to complete the process and will move in the right direction faster than expected to ensure that the country will get the most optimal solutions with the least burden for the overall citizenry and the macroeconomy. The World Bank has revised its outlook for Sri Lanka's economy with an increased GDP growth forecast of 1.7% for 2024, up from the previous 1%, and a reduced economic contraction expectation of 3.8% for 2023, down from 4.2%. These improvements are attributed to lower inflation, currency appreciation, higher foreign exchange reserves, and increased remittances. However, they highlighted that there will be challenges that persist due to uncertain conditions, emphasizing the importance of debt restructuring and structural reforms for sustained growth. Fitch Ratings upgraded Sri Lanka's long-term local currency issuer default rating to CCC negative from restricted default. At the same time, Fitch also affirmed the national long-term rating for 14 local banks, removed them from the rating watch negative, and assigned stable outlooks. The first monetary policy review conducted by the Monetary Policy Board made the decision to decrease both the standing deposit facility rate and standing lending facility rate by 100 basis points each, bringing the SDFR to 10% and SLFR to 11%. Meanwhile, the SRR remained unchanged at 2%. In August 2023, Sri Lanka's merchandise trade deficit witnessed an expansion when compared to the previous year. This widening deficit primarily resulted from the more pronounced decrease in export earnings than in import expenditure. Positive developments emerged in the realms of workers' remittances and earnings from the tourism sector during August 2023. There was a net outflow of foreign investments in the government securities market, while the Colombo Stock Exchange experienced a net foreign inflow. In August 2023, gross official reserves were estimated to approximately $3.6 billion, while Sri Lankan rupee remained relatively stable. Headline inflation, as measured by the year-on-year change in the Colombo Consumer Price Index, decreased to 1.3% in September 2023 from 4% in August 2023. Food prices continued to decrease for the third consecutive month, with a year-on-year deflation rate of 5.2% in September 2023 compared to 4.8% in August 2023. Additionally, non-food inflation also decreased, dropping to 4.7% in September 2023 from 8.7% in August 2023. Ceylon Petroleum Corporation and Lanka IOC revised their fuel prices, followed by Sinopec. Meanwhile, Litrogas Lanka Limited and Loves Gas PLC have announced an increase in prices for domestic liquefied petroleum gas cylinders for the second month in a row. With the recent Treasury-bill auction, the 3-month Treasury-bill rate decreased by 20 basis points, while the 6-month and 1-year Treasury-bill rates decreased by 4 basis points and 14 basis points respectively. Let's take a look at this week's Colombo Stock Exchange market status. Thank you for watching. See you next week.